Good afternoon, and thanks for joining us again. We just finished up this great conversation on biosecurity and the importance in building that kind of an infrastructure as this kind of technology really takes off. And to continue this conversation about care, I'm thrilled to bring two luminaries in the field of impact and ESG into this conversation to really kick off a conversation on the role of sustainability and ESG topics in investing. So just brief introductions here. Catherine Collins is the head of sustainable investing at Putnam Investments. There she manages several sustainable equity funds totaling over $7 billion. And she collaborates more broadly with portfolio managers and analysts on integrating ESG into their investing theses across the roughly $200 billion that Putnam invests. Prior to joining Putnam, Catherine founded and ran Honeybee Capital Foundation, which was an independent research company focused on sustainable investment issues, and did that after nearly 20 years as an equity research analyst and portfolio manager at Fidelity Investments. We're also joined by Governor Deval Patrick, who's a founding partner at the Bain Capital Double Impact Fund, which is an $800 million private equity fund focused on scaling mission-driven companies, and previously served 2 terms as the governor of Massachusetts following a long career in both public service, including as the Assistant Attorney General for Civil Rights under President Clinton, and in the private sector as the General Counsel for both Texaco and Coca-Cola. So thank you both for joining me. I'm really excited to dig in.
Thank you.
Maybe just to get us started, Catherine, you manage over $7 billion of dedicated sustainability-oriented capital at Putnam, and not to mention your impact on the broader portfolio. That is a lot of capital. So I'm just curious, how did that happen, and what have been your goals with those funds?
Well, it is a lot of capital, and it's an honor to steward it. First of all, it's not just me. I manage the portfolios with my colleague, Stephanie Dobson. We have a dedicated sustainable investing team. But even more important than that is the fact that our team is embedded in the equity research team at Putnam. And that really is the key to how things came about. Putnam took the time in planning for this team and this effort overall to step back and say, how can we approach sustainable investing in a way that it extends our traditional strength as active, long-term fundamental managers. And so instead of setting up this team as an island unto itself or a boutique down the hallway or an administrative function, they really took the time to plan for this team to be part of our core equity research process. And the portfolios that you mentioned and everything else comes from that foundation of long-term integrated fundamental research. So that's really the key to everything, is recognizing sustainability issues as core long-term strategic issues that are relevant for any business leader and any investor.
I want to second what Catherine says, that we have to think about sustainability as an integral and central part of all investment decisions, all business decisions, and frankly, all government decisions. And I think that for me, all of this is in the frame of how we shift and must shift from a focus on short-termism to long-term value. And what we've been trying to do at Bain Capital, and I feel really, really great about the success we've had, is to demonstrate that choosing between doing good and doing well, between financial return and measurable social or environmental impact, turns out to be a false choice all along.
So I'd love to dig into that topic, because I think there's definitely a perception that impact investing must have lower returns, and you're describing it as a false choice, Deval. And I think that perception exists either because ESG-oriented companies must obviously not care about profits because they're optimizing on some other dimension, or maybe the more neutral pushback is that it's just a smaller potential investable universe, and so it must be more competitive. So obviously that's not, you've heard that concept before, but you've both raised real amounts of capital against this within very large institutional investment firms that I know personally definitely care about returns. And so I'm curious how you then think about the critique. You described it as a false choice, Governor Patrick, but I'd love to dig into that a little bit more.
I'll start and simply say that when we were organizing the Double Impact Fund at Bain Capital, was the first impact investment fund at any institutional investment firm, any private equity firm, and we made a decision to strive for superior returns, not as a value judgment for what others may do, but because we wanted to demonstrate that you didn't have to make that choice if you didn't want to. You might choose to, but that you didn't have to. And we chose sectors in which to invest where we knew we could generate that sort of return. So health and wellness, sustainability broadly described, education and workforce development. All of these are secular trends where there's an awful lot of activity, and there are great mission-driven companies that are in the lower middle market in North America who are looking for value-aligned capital so that they grow, because they are concerned that the investors come along and say, we'll take it from here. We like what you've done, but that the mission will get lost as they grow. And I'm delighted that as the first fund is now deployed and the second fund is well underway, I believe we are in the top quintile of the Cambridge Associates measure, not just of impact investing funds, but of middle market funds, regular way middle market funds. And that is what we're trying to show. You can do this at scale. You can do it over time. And it is about thinking about and organizing toward and being intentional about long-term value to all stakeholders instead of just short-term return for a handful of shareholders.
It's interesting. The theory and the math of traditional finance and neoclassical economics is really zero-sum math. And so there's a reason for this really strong root of either or thinking on this topic. The bridge, to me, there are two bridges that are important. One we just touched on is relevance. As soon as you recognize sustainability issues as relevant to long-term business success, all kinds of doors open up. And then the second key is the short-term, long-term element that Governor Patrick just mentioned. Once you get past a decision that might be hard in the first week or the first month and really extend your time horizon, it's amazing how much alignment there is between something that is sensible and additive from a sustainability perspective and also sensible and additive to company performance. So our premise at Putnam and the goals of the funds that I'm running are very explicitly to seek out companies where excellence in sustainability is making the company stronger. It's not just that they happen to be managing these things in parallel and they're doing a good job at both. It's that one is fueling the other in a direct and positive way. And so just as one small proof point, it's not forever, but our two lead public equity portfolios just hit their 3-year anniversary, which is very important in the public equity world. Our sustainable leaders portfolio at that anniversary mark was roughly 400 basis points annualized ahead of the S&P. And our sustainable future product, which is solutions innovation oriented, was about 600 basis points ahead of its benchmark, the Russell Mid-Cap Growth benchmark. And so to Governor Patrick's point, those are great numbers, not just within a little slice of ESG-centric portfolios. Those are just great numbers, and I think are proving out that thesis.
I think Catherine is exactly right. What we want is whatever kind of investing professionals are doing is to be intentional about the impact of that investing on multiple stakeholders. That is a fact of investing. Every business decision has some kind of impact, and if you're intentional about the impact beyond the shareholders, then you get better outcomes, and it turns out I think you get better return as well.
Maybe to just end our time together here, a couple of questions for each of you. I'd love to just selfishly understand, what themes you're most excited about in this area. What over the next 5 years you think is going to maybe drive the most impact or be the most important areas of focus for your funds. And then, just given the audience today, I thought it might be helpful for you to just share any thinking or advice on how they might incorporate some of these ideas or themes into their own strategies if they're approaching it really for the first time.
One of the tools that we've used for a number of years is this big, giant thematic map. Honestly, it got a little bit sprawling, and so we recently reorganized it under a publication called Investing to Thrive. And it's got 3 main layers. One layer is individual thriving, health and human well-being. The second is thriving systems and society, with a lot of really interesting complexity within that layer. And the third is thriving planet, supporting life as we know it. And so a few of the themes that are highlighted in that report and really interesting and important to us from an investment perspective are also interesting and important, I think, to Ginkgo and companies like it. One is the movement towards circular economy, where we're thinking much more of the economy as an ecosystem, as opposed to this linear extraction and disposal kind of model that came with the industrial era. A lot of implications there for all types of materials, all types of logistics, all types of consumer-oriented companies. Really thinking about that full life cycle has implications across almost every type of business that we look at. And a second main area of focus is thinking about natural solutions and biological solutions. Almost everything that we invented synthetic, mostly hydrocarbon-based chemicals for in the last century can be solved and solved potentially better with biological solutions. And so, again, there's a wide range of implications there across lots of different sectors and products and types of companies. But those are two of many areas on that map. And I'll note that the ethos there, again, is asking this question: what is needed for thriving? So we're not looking for innovation or developments that are clever. We see a lot of investment ideas, and there are a lot of very successful companies that just do something kind of cool and neat, but maybe not so essential, in the grand scheme of the world. Those can be fantastic businesses. Sometimes they can be fantastic investments. But there's a real much rarer tier of companies that I would put in the wise category. And these are companies that are doing something truly innovative, but they're doing it with a care and attention to the long term that we've been talking about today, that really might create some essential foundational capabilities in the world that didn't exist before. And when you see that kind of opportunity, that is a really exciting one. Not without risk, for sure. If that care isn't there, it can be disastrous. But boy, when those things combine, it can be really powerful. So that's what we're seeing in terms of themes and some of the areas that we're focused on from an investment perspective.
For all of those executives and all of us and lots of other people, to your second question, Anna Marie, sorting out what it means to have rigor around environmental, social, and governance standards has to be understood as more than compliance. Compliance is important. That's not what I'm saying. But what it is you're doing to lead, what it is you're doing to stretch, and how intentional you are about that, as distinct from having a bragging point or a marketing detail on the side, is the sort of thing we are looking for. And I'll say just one last thing. My team is tired of hearing me say that I am, but I will say I am confident that there is a regular way widget company out there that hasn't thought at all about ESG or its sustainability potential, where a private equity investor with the right team and the right executive leadership could take that widget company and turn it into a high impact enterprise. One day we will start to do that. And when we start to do that and show that it can be done and that it can generate alpha on the financial side as well as on the impact side, everything changes.
I love that, Governor Patrick. We've actually, I've observed the same thing from our standpoint, where, Catherine, you mentioned earlier that biology can impact just about everything. But, I've gone and I've spoken at chemicals conferences, and, they're full of oil executives from Texas who've never thought about biology in their industry and how could that be applied. And so, Governor Patrick, I think you're absolutely right. There are so many industries where from our perspective, a kind of an environmental solution, or, which may, actually have a real business and long-term kind of strategic impact as well, just isn't even on the radar yet, but could in fact be one of the most important strategic business drivers for these companies going forward. And I get really excited as well about finding those pockets that just haven't even thought about it yet, and finding a way to demonstrate the value and take these very large established industries and help drive impact there. That's certainly one of the one of the core sort of tenets and values of what we're doing at Ginkgo. And so have really appreciated your you being a sounding board to us and to the industry more broadly. And can't thank you both enough for joining us today. I think you're both luminaries in this field and innovators in the field and are clearly having an impact far beyond your funds. And so thank you so much for joining us this afternoon, and wish you the best.
Great to be with you.
Thank you. What a joy.
Take good care.